Let's explore 3 ways to grow your wealth quickly using the power of dividend investing. One powerful approach is choosing companies that not only pay dividends, but also increase them over time. These are known as dividend growth stocks. A dividend growth stock is a company that pays out regular dividends to shareholders and raises those payments year after year. While there are many types of stocks out there, these kinds of investments are considered more stable and reliable, even during uncertain economic times. That's because companies that pay and grow dividends are usually well-established businesses with solid financial health. Since they consistently increase dividends, it also usually means they are growing their earnings steadily. Investors often choose to include a large percentage of these stocks in their portfolios. The reason is simple. They provide a steady source of income and have the potential to grow in value over time. That combination can be very powerful when it comes to building long-term wealth. Not only are you getting paid to hold the stock, but the stock itself might increase in price as the business grows. If you're thinking about picking dividend growth stocks, there are a few key things to look out for. One is the dividend yield. It's generally smart to aim for a yield between 3 and 5%. A yield under 3% may not produce enough income to really build momentum, and anything over 5% could be a red flag for higher risk. Another thing to examine is the company's dividend history. How long has the company been paying dividends? More importantly, how many years in a row has it increased them? The longer the track record and the faster the growth, the better. This shows that the business has been reliable over time and is committed to rewarding its investors consistently. Companies that have increased their dividends every year for many years are often financially sound and well-managed. This kind of consistency can give investors peace of mind, especially during uncertain market conditions. It also suggests that the company is likely to continue doing well in the future, which can translate into ongoing returns for you as a shareholder. Choosing the right dividend growth stocks is a strong foundation for building a dividend snowball that keeps growing with time. Another important part of building your dividend snowball is consistently adding money to your investment portfolio. It doesn't matter how great your stock picks are if you're not regularly putting in more capital. The more you invest, the more dividends you'll earn, and those dividends can then go on to create even more income. So how do you increase the amount of money you can invest? There are 2 main approaches: saving more money and earning more money. Each one has its challenges, but both can be effective. Saving more might mean cutting back on spending in other areas of your life. Maybe it means skipping certain luxuries, cooking more meals at home, or being more mindful about where your money goes. These small sacrifices can add up and free up more cash to put toward your investments. On the other hand, earning more money might involve picking up extra work, freelancing, or finding new income streams. While this can take more time and effort, it also has the potential to significantly grow the amount of money you can invest. Ideally, you want to find a balance between these 2 strategies that fits your lifestyle and financial goals. Maybe you cut back on some spending while also finding ways to increase your income, even just a little. Over time, these efforts can make a big difference. By regularly putting more money into your dividend portfolio, you speed up the growth of your investment snowball. Every additional dollar you invest increases the amount of dividends you'll receive in the future. What makes this strategy powerful is that it's not about trying to time the market or make huge gains overnight. Instead, it's about being consistent. Think of it like watering a plant. You might not see big changes right away, but over time, the results can be impressive. Small, steady investments combined with solid dividend-paying stocks can create serious momentum. That's why many successful investors focus on building habits that help them contribute regularly, whether it's weekly, monthly, or whenever they have extra cash to spare. Now that you're regularly adding to your investments and choosing strong dividend stocks, there's one more powerful step to take. It's something simple, but it can dramatically increase how fast your money grows. Final and possibly most powerful step in building your dividend snowball is to reinvest the dividends you earn. Instead of taking the cash payouts and spending them, you use that money to buy more shares of dividend-paying stocks. This might seem like a small thing, but it can make a huge difference over time because of the power of compounding. When you reinvest dividends, you're not just earning returns on your original investment. You're also earning returns on your returns. Think of it this way. The more shares you own, the more dividends you'll get next time. Then those dividends can be used to buy even more shares, which will generate even more dividends. This creates a feedback loop where your income keeps growing, even if you don't add any new money. That's the heart of the dividend snowball strategy. Over time, this compounding effect can accelerate your wealth building in a big way. It's also a very passive way to grow your portfolio. Once you set up dividend reinvestment, most brokerage platforms will handle it automatically for you. You don't have to manually buy more shares or worry about timing the market. The process just keeps going in the background while your portfolio quietly builds momentum. This strategy is especially effective when combined with the other two parts: investing in quality dividend growth stocks and consistently adding money to your portfolio. When you put all three together, smart stock selection, regular contributions, and reinvested dividends, you create a system that's constantly working in your favor. It rewards patience, consistency, and discipline. It doesn't rely on luck or risky bets. It's about playing the long game with a strategy that has worked for many successful investors. The best part is, you don't need to start with a lot of money. Even small investments can grow significantly over time if you stick with it. The earlier you begin, the more time your money has to compound and grow. So whether you're just getting started or already on your investing journey, reinvesting your dividends is a smart move that can pay off in a big way over the years to come. Thanks for watching InvestingFlix. If you found this video helpful, don't forget to like, share, and drop a comment below. For more expert insights on personal finance, investing, and wealth building, hit that subscribe button and turn on notifications so you never miss out.